If you look at the big boost which has happened in SIPs, is
Yeah.
exactly the time around when the ATC incentive has been cancelled. So people have meaningfully deployed that money, but most part of the money has gone into consumption also. People have started to spend more. If you look at the GST data, we are seeing substantial rise in the GST collection, which shows that the consumption is being boosted. Government has done two things at the same time. One, they have removed ATC incentives, rationalized the income tax rates to lower, and at the same time reduced the GST rates in the some of the consumption items. So you have simultaneously done so many things which actually makes consumption more important than savings.
Hello and welcome to Macro Decode. There seems to be a big contradiction in the household savings data. Over the last decade, equity participation and SIP investments in mutual funds by retail investors have surged from around 3% to 15 to 20% of gross national disposable income. The stock markets also have been on a bull run in the past 10 years. However, net household financial savings have declined from about 7.9% of GNDI in FY16 to 5.8% in FY24, though they made some recovery to around 7% in FY25. To understand this contradiction, let's talk to Sachin Sawrikar, Managing Partner, Artha Bharat Investment Managers. Welcome to the show, sir.
Thank you, Sangeetha, for having me. It's a pleasure talking to you.
India has witnessed a spectacular rise in stock market participation, SIP investments, and mutual fund ownership over the last decade. Yet net household financial savings are lower than what they were a decade ago. How do you explain this apparent contradiction, sir?
So, Sangeetha, what looks like an contradiction is actually two things happening at the same time. Okay, first, households are putting more money, as you rightly pointed out, in equities and mutual funds, which is a very positive thing. But at the same time, they are borrowing more. Personal loans, housing loans. So what that leads is when it gets combined, your net saving rate looks lower.
Okay.
So even though people are investing more and are very active in this. So the changes which the government has done in the taxation policy while bringing the new tax code has had a material impact on this. And that is what not discussed a lot in the policy makers. So, until the new tax regime came in, there was a section 80C where everybody used to invest 1.5 lakh rupees in tax saving instruments and they used to get tax benefit out of that. And this was something which everybody did universally.
Right.
So the government, by introducing the new tax code, which has a lot of benefits, by the way, has removed this thing. What they did was they improved the consumption. So they gave a consumption boost, but they removed the saving habit without replacing it with anything equivalent. So that something has led to, if you look at PPF, NSCs, all those tax saving instruments, you have had a meaningful fall in the number of subscribers as well as the amount that is being raised in it. So what we are doing right now is we are not enabling the Gen Z, as people call generation, to start this habit of saving, which was just compulsory. I think that is something we really need to look at.
You rightly pointed out that people used to invest in PPF and life insurance just for the tax deduction. Now, income tax deduction is not a major incentive as per the new tax regime. Is it actually affecting the life insurance purchases also? Have you seen any kind of a trend there?
To some extent, yes. Earlier, as I said, while I personally felt ATC was not a very efficient method of saving, but it was something which was universal. So the small insurance policies anyway is, if you ask me, meaning not having any relevance. And I actually advise people not to take this insurance which has saving elements in it, but only take term insurance which protects the life, the family if something happens. So for me, that's a positive thing that people are not putting it in insurance which has saving elements, but are investing in mutual funds, which are a more effective and efficient way of investing.
Right. The household's liabilities have risen significantly over the past decade. Is India's growth increasingly being driven by this credit fuel consumption rather than income-led savings? Is this a matter of concern for the economy?
Yes, I think it requires to have much more attention than what currently the policymakers are having. India's household debt to GDP has risen to from 20% to almost 45% now, which is a substantial jump. And as you rightly pointed out, and it is leading to a substantial growth, which is consumption-led growth. If you look at globally, also US. If you look at US GDP, it is mostly consumption-led. There also you have a lot of household debt, whether it is housing, credit cards, or personal loans. So what that is what we are also reaching there. So and that is where we are having challenges. While the saving picture is also good, but the net household financial saving has fallen, and that should worry everybody. It's fallen by almost 5% of the GDP. So I would be very worried about this issue because for a growth of economy, we need to have very strong household saving. While liabilities lead the consumption-led growth, but we do need savings as well.
In the past decade, I think the bank deposits have come down from around 50% of GNDI to 35%. Do you find this as a risk for households? That is one thing. And also, will it actually affect the banking system's ability to fund credit growth?
Yes, definitely. Banking sector is being impacted, but they need to find more creative ways of raising the deposits because again, deposits at 7% or 6% is not really an efficient way of savings for any investor. So they need to find better methods, structured deposits to find them. But yes, when the deposit falls and people are spending more and saving less, or saving in a different instruments like equities and SIPs, there is definitely an impact which is happening to the banks. So that is something that they have to look at it, right? They go to tier 2 and tier 3 cities where people are more attuned to fixed deposits than they are in metros. So
Yeah.
it's a matter of time how you realign yourself and manage the way investment culture and habits are changing.
Right. Is it actually going to be an issue for the banking system where they are not able to fund the credit growth?
These things keep happening. Eventually, the banks will find a way. Globally, we have seen that happening. There are different instruments that will come. They need to give higher rate of returns to investors to attract more. So net interest margin may fall, which is what happens globally also. You need to be more productive. You need to manage your operating expenses so that you can manage the profitability with lower net interest margins. So the banks also have to change. Indian banks have probably one of the highest CASAs in terms of percentage. It's a free amount of money which they get to manage their growth. But that may not necessarily happen going forward. People become more aware, more efficient in allocating their investment resources. So banks also need to realign themselves and get to make themselves more attractive for money to flow in.
If you look at mutual fund, the amount that is going into mutual funds have significantly risen in the past few years. Do you think actually the wealth is increasing or the kind of growth that we are seeing there in SIP investments into mutual funds?
See, SIP on the headline number, Sangeetha, it is increasing. I'm very happy about it. But what we also need to look at it is there are a lot of people who are stopping SIPs. They're not sustaining the SIP.
Okay.
If you look at the numbers, very many times so happens that the more number of subscribers are dropping than the new subscriber coming. Especially in the month of March and April, that's when most of them set up for a 1 year or something, right? They need to go back and redo it again. So that's where the challenge is happening. So we need to see these subscribers continue over a long period of time for the wealth to be generated. As of now, if you look at the per investor AUM, is substantially still lower for it to meaningfully make a difference to the wealth of the investor. So unless you see it sustaining over a period of time, only then we can see that make a difference to the wealth of the investor.
Okay. India wants to have a GDP growth of 7 to 8% at least for the coming years. How important is household savings in financing the investment needed for this kind of target?
Yes, of course, to maintain this sort of a growth, we need to have at least 35% of saving to the GDP. Currently, we have fallen to 30%. I think that's where our policymakers needs to look at how do we boost the saving rates. And that increasing to equities is one way, but that is not really how the government will benefit or the economy will benefit. So I see if you ask PPF, NSC, they were a different source of savings which the government used to have. While people always used to say that the percentage return which the government used to give on this was higher, but it was a different source, right? Today, even if this 20-30,000 crores is stopped, you have to go to the market to borrow. And if you go to the market to borrow, you are then crowding out the private sector because you are borrowing more. So you need to maintain such sources of investment. I'll give an example of our company. We are reaching 20 employees in one location soon in India, in GIFT City, uh, which means we have to then be subscribing to Provident Fund. None of our employees actually want to subscribe to the Provident Fund. They say there is no benefit for them to subscribe to the Provident Fund. So, most of them are opting out of the Provident Fund. Whereas, if you look at everybody in the past, almost everybody has a Provident Fund account where the employer contribution and employee contribution are there. So, I mean, people are changing their outlook because, again, the tax breaks are a very important criteria for people to save.
Bringing all these things under income tax, will that itself improve the savings, or do you think the government has to actually bring out more instruments that would probably bringing the people, especially the youth, into the savings habit?
Yes, they should bring in more instruments, but at the same time, how will it make it attractive to investors is an important aspect. So today, if you look at it, PPF or PF give about 7 to 8% return, which is similar to what a bank deposit does. But people's aspiration from the returns have gone up to equity level returns, which is like 12 to 15%. So obviously they are looking at a higher rate of return, and how do we attract such investors to long-term saving? So PPF gave a 15-year, PF was 30 years because you hold it till retirement. So, these sort of instruments are what we need people to invest more for the economy to benefit.
Right. If you can cite some examples globally where the governments have succeeded in bringing this kind of long-term savings habit, especially among the youth.
See, if you look at globally also, in US also, you have something called 401k. Okay.
Okay.
Everything which is long-term has to have some tax benefit added to that. Even in US, a country like US, which is very taxed economy, they have given tax benefits for 401k. So we need to see, while we want to simplify the taxation regime and we want to make it simpler, increase the consumption, boost, whatever you want to say, but at the end, savings is important, and we have to give support to such by having such incentives for savings. We cannot otherwise, who will invest 15-year paper or 20-year paper? Nobody is looking at such long term without having something really supporting them in the near term.
So maybe looking ahead, maybe by around 2030 or so, what concerns you more? Slowdown in household savings or a slowdown in household consumption? Which poses a bigger threat to the India's long-term growth story?
Savings, without question, Sangeetha. That's something which is really important for us. And that's where we are. If consumption slows, governments has tools, right? They can spend more, they can invest more, they can make more roads. We can boost the consumption in a different way. But if saving falls, how are we going to make up for the lost savings? And we need to have this saving to maintain the sustainability. And currently the data is giving us a warning. We have not reached a place where it is making a meaningful difference to the growth rate. But currently we definitely are in a warning because it has dropped a lot. And that's something that we really need to worry about right now.
Okay. How can India strike a balance between promoting financialization through equities and mutual funds and also ensuring that people are investing in long-term instruments of savings?
They are, if you ask me, they are definitely not something who are in conflict naturally, correct? But what has happened is because of the way the government has made changes, most of the people have gone to one direction, which is SIPs. Like, so see, the Indian saving pool is to a large extent constant, right? It grows because the number of people coming to working has increased. But the pool is similar. the pool has removed the money from ATC incentives. If you look at the big boost which has happened in SIPs, is exactly the time around when the ATC incentive has been cancelled. So people have meaningfully deployed that money, but most part of the money has gone into consumption also. People have got to spend more. If you look at the GST data, we are seeing substantial rise in the GST collection, which shows that the consumption is being boosted. So the government has done two things at the same time. One, they have removed ATC incentives, rationalized the income tax rates to lower, and at the same time reduced the GST rates in some of the consumption items. So you have simultaneously done so many things which actually makes consumption more important than savings.
Right.
And that is what is resulting in lower net saving currently. And I think we need to take steps, because if people forget or people stop this habit of saving compulsorily in a tax saving instrument, to get them back is very difficult. People get used to this, right? People say, okay, that's fine, I'll pay the tax. What is the purpose? But whereas for us or our previous generation, it's been a habit that, you need to put money in this tax saving instruments, and which is very effective. While we say PPF is an 8%, but if you're in the highest tax bracket, you are saving 30% immediately on the tax. So which means your rate of return was not 8%, but about 11 to 12% tax free, that too. So we need to make these changes in our policy.
And also, if you look at equity markets, it's always vulnerable to cycles. We have been seeing a bull run for the past few years. So probably we will also see downward slide in the market. In that case, will people actually move out of equities as well?
So currently we don't have too many alternatives. So see, as our economy progresses, see, while market cycles are there and they continue to be there, but to a longer term they give higher return than any of the alternate investments. So it's important that people sustain the SIP through bad times. So only then they can make money in the long term. At the same time, as our economy size increases with the investments pool increasing, people will also look to diversify to international investments. That's what happened globally as well, right? So when the US started their increase, then they look at investing in emerging markets, they invest in other developed markets. So same thing will happen with India as well. So currently, if you look at the data of what foreign exchange being spent, right? Currently through LRS, currently it's about 30 to 35 billion dollars, which every year Indians spend in foreign exchange, residents of India. And then of this, today, it's only about $3 to $5 billion is invested. The balance is spent on travel, health, medical, and education of children. So, what we need to see is this number also meaningfully increase.
Right. So that was Mr. Sachin Sawrikar. According to him, though the retail investors have been moving towards equity markets, it's also vulnerable to cycles, and consumption obviously is not going to help savings. Savings is not just important for households, it's also important for the economy. Thank you for joining me on the show, sir.
Thank you so much, Sangeetha.